Hi everybody, Alex Aplorio from Expert Forex, and in this long-awaited video I am going to show you two new pruning functions that we will be adding to our Liberty range as well as our hedged EA and possibly to the profit retriever. These changes will come through in the next week or so, so I'm just giving you a preview of what is to come, and also to invite any comments or suggestions on what you see. Okay, so what has prompted this change? And if you look on your screen, you can see this is the Aussie yen, and there's been a trend of 700 pips with very little retracement. This type of trend has been very detrimental to traders using the profit retrieval based EAs. And then if we look at the pound yen, we see even a worse situation. Here we see a trend of 1,000 pips. Now those type of trends are really not good for the profit retrieval EAs, but what you will see today will really assist with trends like this. So we are introducing two pruning techniques. The one is the two-trade pruning technique, and it'll make more sense as we go through the video, and the other one is the gap pruning technique, and you don't need to use them both. You can use one or the other, or you might not want to use any of them. So the settings allow you to switch them off or activate them, and I'll go through the functionality of each one. But in general, the trading concept is that the normal profit retrieval process should be used initially for the first 5 to 7 trades. That is where the real money gets made, and that is ideally in a sideways type of market. When the market starts trending, you would change to the two-trade pruning technique, and if the market is trading severely, you would use the gap pruning technique. So each one has a zone that they are most effective in. Okay, so let's start out and look at the two-trade pruning function. And why we call it the two-trade pruning function, it closes two trades at the same time. And as mentioned before, it activates when there are 5 open trades active. You can actually change that setting. It's a flexible setting. You can make it 7 or 8, but 5 is the minimum. We are looking at moving that down to 4 as a result of some of the testers input. When it's finalized, you must probably see a minimum of 4 open trades there. I must just let you know that I'm going to show you some live trading during this video. So a lot of this will make a lot of sense when you actually see live trading happening. So once there are 5 open trades, what happens is that whenever there is a retracement of one gap size, the EA will close the retrace trade and also go and find a trade that is negative that can be offset against that closed trade in a positive way. And on your screen you can see examples of this, and as I said, it will become a lot more clearer when we actually see live trading. Okay, so let's take an example from this illustration here, and again, as I say, it will be a lot clearer when we see it live. But let's say there was a trade opened and it retraced by the gap size, so it actually made a nice profit there. And then what the EA does is it goes and finds a trade, a negative trade that is less negative than the profit that was made. So it goes and finds, and there it found a trade way back there. So what it then does is it closes that trade and it closes that trade, and that's where the pruning concept comes in. It actually prunes 2 transactions at no financial loss. So that's how the two pruning function works, and as I say, let's have a look at it when it's live. It's very clear. It's a lot clearer than looking at this particular picture. Then we have the gap pruning function or option, and why that one is in place is that when the market is trending very strongly, the retracements are sometimes not that big, and the gap size could be a size that is way too big. So what we've done is we said, okay, when the market's trending strongly, then we will only go for a 50% retracement. And here's an example. There a sell was opened, it retraced 50%, and therefore it was closed. And that's all that happens. So the transaction makes a profit of 50% of the gap size and it closes. So it eliminates one lot in the trading process. And that's all that the function should do. And should the trending continue, then that particular trade will be opened again. And the same transaction can actually occur again over and over again. But the whole idea is that in a strong trending market, retracements of a whole gap might not happen as anticipated by the two trade system. And therefore, this 50% retracement can come in handy. Now, I must remind you that the pruning is actually a disaster prevention technique. So it is best used if you prevent disaster in the first place. And the best way to prevent disaster is to use appropriate initial gap sizing and appropriate initial lot sizing. If your lot sizing is small, your gap sizing is big, you are less likely to run into huge amounts of negative trades. So pruning should not be relied on, and the traditional settings are best to manage risk. And here's an example of a table that you would use, that if you, for instance, trading the pound yen, you can see that the maximum movement calculations are in the region of 52 pips. That's the kind of gap size you'd use for the pound yen. The Aussie yen, which you're going to see later on in this video, has a 50 pip gap calculation. Now, these are my calculations. They're the ones that I use. You can use something similar, but the whole idea of this is that the ATR, or the vibration rate of a currency, is a good guide towards the gap size, and ones that travel a lot during the day have bigger gaps, and ones that travel a small amount during the day, like that one down there, 15 pips, has a smaller gap. Now, you can get more information on this in this particular video that I did a while ago. Please go and have a look at that, because it's very important to match your gap sizing to your currencies. And then lot sizing is quite important, and I have created a tool that can be used to calculate the effect of lot sizes used. There are lots of other methods of determining what kind of lot sizing you need, and I will make that a subject of a future video. This model is actually quite nice. You can put a gap size in, you can put the multiplier in, and by the way, this is a training session for owners of the various EAs, so I'm not going to explain those kind of concepts. Then you can put an initial lot size in and a multiplier on that, and it will go away and calculate what the gap sizing would be and what the effect of drawdowns would be. So that's quite important, because depending on the account size that you're using. So quite a handy little model, and this again will be available in a couple of days. When watching the trading that I'm going to be showing you shortly, please bear in mind that pruning is not a profit-making exercise. It is a risk reduction exercise. So the benefits of pruning are they reduce the number of open trades before and during a trend. Now that's very important, because the problem at the end of the trend is actually caused by the open trades at the beginning of the trend. So if it solves that problem nice and early, then that reduces the risk at the end of the trend. It also lowers the margin required. So because you have less open trades, your margin requirements are less, and it also lowers the overnight or swap fees that are being charged. So you don't want a lot of open trades all the time, and the pruning prunes it so that you don't pay overnight charges. So those are the main benefits of pruning, not so much to increase profits, but indirectly to increase profits because it reduces the risk of runaway trends. Okay, so what I'm going to be showing you is the trading of the Aussie yen that caused a lot of concerns to traders. And what we're going to be doing is we're going to trade it from the 1st of March to basically today's date. And we are going to be trading through what is almost a normal situation, and then we're going to be trading it through the highly trending situation. The trend started here on the 19th of April, so remember that date, because as we reach that date we will see the impact of the pruning and so on. But there are some big movements here. There's a 270 pip movement, there's a 250 pip movement, and there's another 200 pip movement. So there's a lot of trends that have happened in the meantime, but it's a good idea for you to see all the phases of the trading, which is the phase where the profit retrieval process works, because that's important. Then you see the phase of where the two trade pruning occurs. And in this particular video I'm not going to be showing you the gap pruning approach. We've recently picked up a change that needs to be made to that particular trade logic. So on your screen you can see a MT4 platform. I'm actually accessing this platform on a completely different computer remotely, and we're going to be working using AnyDesk to run this particular exercise. So on your screen you can see the chart of what we're going to be doing. You can see why we have actually got out of most of the trading of yen crosses. The yen is going mad. It's gone up, down, sideways, down, up. It's just doing whatever it wants to, and it's a dangerous currency to get involved in. And we're going to be trading the Aussie yen, which is the one you want to see on your screen, and I must say back trading them. So we back trading them using tick data, and we're going to be, this pruning is currently based on the RSI Forex Liberator, and you can see that's the development version. We're going to be trading the Aussie yen. We're going to use the every tick basis. We're going to be trading from the 1st of March, which is somewhere over here, to just go through a normal phase, and then we're going to be trading that particular phase. And then this will all happen in visual mode, so we're going to actually see the trading happening. And I will be making comments. The trading will most probably take 15 or 20 minutes. I will make comments as we go along, but there will be periods where there will be silence. We're going to be using the 15-minute time frame. We're going to be using a spread of 3, which is actually most probably quite high compared to some other brokers. And let's have a look at the settings that will be used. Okay, so I'm going to be using a 4 RSI. Overbought's going to be 75.25. The gap is an important one. I'm going to be using, if you look at the previous slide, you'll see the Aussie yen was a 40 gap, so I'm going to use a 40 gap. We're going to start scaling the gap by 10% straight away. That's what those settings do. The initial lot size is 0.1, and that's a suitable lot size for showing you this process. The multiplier will be 1.1, which is a 10% increase in lot sizing. So when you use 0.1 lots, the pip value will be about $1. For yens, it's slightly different, but we can work on $1. And why that's important is that when we look at the take profit, we want to have a reasonable take profit in pips or in dollars. So we'll say we actually want a hidden take profit of 40. So you see there, in other words, the initial trade has to travel 40 pips to cash in. That's its target. But we're going to tell the broker that our profit is our target is actually 60. So that's just one of the quirks of this EA. We're not going to use a trailing stop. And then the target closure for the basket of negative trades. So in other words, they will close at this amount, and I'm going to make it the same as our normal target of 40. Then let's go down here. We're going to be trading the Aussie yen, and let's go down to the pruning setting. And this version does not have the gap pruning setting in yet. It only has the 2-trade pruning setting. So the 2-trade pruning setting says, when do you want to start this trading? After 4 negative trades, or 5 negative trades, or 7 negative trades. So I'm going to actually, although it says I'm going to actually use a setting of 4, and that is the most likely setting that is most likely to be the minimum setting allowed for open trade. So 4 and upwards would apply in the future. So I'm going to use a setting of 4, and that's all that I need to change. I then press OK, and we are then ready to backtest. Okay, so now we're ready to start the process, and I'm going to just start running the settings that we've just gone through on the period from the 1st of March to the, in fact, I'm going to make this the 2nd of May. Okay, so let's get that going, and I'll click on Start. Okay, and it started trading, and I'll just make comments as we go along. There, it started a sell trade. So what happens at the sell trade there's the target of the sell trade, and should the price touch that blue line, it will be a positive trade at the side. That red line over there is what the broker sees, and there we are. So that's been cancelled out. It started now a buy, and there's the buy's target, and there is what the broker sees. And what I'm going to do is I'm going to actually get rid of the grid just to make this a little bit clearer. I'm also going to make it a bit smaller. There we go. So 2 positive trades straight away. At the moment, we are not in a trade. So the RSI will only enter trade when it sees one. Here it's seen a buy. There's target for the buy, and let's see how this one goes. Okay, there's another successful trade, and there we have another successful sell. These things happen pretty quickly. Got to keep your wits about you. And now there's a buy in place with a target over there. Now there's another buy. So now new dynamics come in. This is now the profit recovery process, because there is the target. It's dropped quite a lot. There's another buy, so a new target. You can see the new target has dropped quite a lot. So the price, the target follows the price downwards when buys like this are created. And there is the cash in. Unfortunately, you might not be able to see the lines here, but there are the cash in lines, and the 3 buys were cashed in profitably, and it's now entered a sell, which has the blue line target. So far we haven't seen any pruning yet. The market is going sideways, and that is why I started in this particular period. Is I want to show normal trading, because this is where money gets made. Every cash in that you've seen so far has resulted in a $40 cash in. Now it's in a sell. It's identified a sell. There's the blue line. Let's see if it hits the blue line this time. Okay, there it's hit the blue line. No further trade. Now it's entered a sell. There is the target for the sell. Let's see what happens here. All right, so now it's got 2 sells. The target has moved up, as you can see, quite a lot, and we just have to wait to see the results. I will edit out the boring parts of the trading, so we don't need to watch the screen for minutes and minutes while these trades resolve themselves. There's a second sell that's now been opened. There are 2 sells. Now there are 3 sells. Now there are 4 sells. Okay, so now the pruning function is now activated. So let's see how that goes. Okay, now there's 5 open, pruning function is definitely activated, and let's see how that goes. There's now the 6th cell. So there's 6 cells open. Pruning is activated. And there we are. So let me just stop this. Okay, so what has happened here, because there are more than 4 open trades, pruning activated, and it pruned the current transaction, which was positive, and then it went and found another transaction that it can prune at a profit. As you can see, there's a profit. Then it went down again. Because there were then 4 transactions open, it then continued to prune. So it pruned the next transaction positively, and it found another transaction that it could prune. So that's how the pruning works. But now there are only 3 open trades. So pruning is no longer active. So let's continue. So I hope you're getting an idea of how the EA works. It does the profit retrieval process, and it does the pruning process when there are more than 4 trades open, because that's the setting that I used. You can set it for 5 or 6 or 7. I've just said I don't want runaway trades after 4 open trades. Okay, there's 3 open cells now. There is the blue line. That's the target line for these 3 trades. Should the price come to this line, it will close at a $40 profit. Okay, it's gone up now and opened a 4th trade. So now pruning is active, and a 5th trade, again pruning is active. And let's see what happens in the markets and after this. Okay, so let's stop it here. Now, so pruning has happened. It's pruned the latest trade, and it has pruned, it's gone and found a negative that will result in a profitable close. The open trades are now 3, so pruning will not be active from now on. And the price must come down to this line over here to resolve the open trades. Okay, there's another cell that's activated. Now there's the new target that has been set for the 4, but now pruning is active, so pruning will apply from now on. Okay, we now have 5 open trades. There we are. So from 5 trades, we've gone to 3 trades. Again, it prunes the positive leg and finds one that will be positive if closed. So we now have 3 open legs, and therefore pruning doesn't apply. What does apply is this new target that's been set for the remaining open trades. So the price has to come down here to resolve the 3 open trades. Okay, the 3 open trades have finally been closed after a lot of sideways trading. And we now have no open trades at the moment. We are on the 19th of April, and that is when the huge 800 pip trend started. So let's watch what happens as this trend starts. We are neutral. We have no open trades, which is a fantastic phase to get to. And let's continue trading. So there it went into a buy and closed the buy profitably. There are no other trades open at the moment. There it had opened a buy and again closed it profitably. Now it's opened a sell, and there's the target for the sell, which it just missed. And let's see what happens. Okay, another sell open. So now we have 2 sells against the trend, 3 sells against the trend, and the blue line is the target. Then four sells against the trend. Now pruning applies, because there are 4 more open trades, 5 open trades, 6 open trades. Here's the trend. Oh, they're pruning reach. So again, pruned the biggest one and then found another one to prune. So we've lowered our risk in an upward trend. We have 6 open trades. Pruning applies in this instance. 7 open trades right now. 8, 9 open trades. So this is where the huge so it started trending, it started pruning very nicely as the market corrected. Just prune, close all of the unnecessary trades. There is the target for the remainder of the trade. There are 4 open, so pruning still applies. There's another prune. Now there's still 4 open, so pruning still applies. Let's see what happens. But bear in mind, this has been quite an incredible trend, and there are only 4 or 5 open trades at this stage. So the pruning has managed to contain open trades in a massively wild market. Okay, so that's the end of the trading. That's up until the 1st of May. The net result is that the pruning, because it's pruned all those top trades, has confined the open trades to 5 open trades. Pruning still applies because there's 5 open trades. Anything 4 and above, pruning will apply. And should the price come down now, which we know it did, if you look at today's trading chart, you will see that came down, and it most probably eliminated the 5 open trades and started a whole lot of new trades. Now I hope viewing the actual live trading as you've seen it on the it's not actually live, it's back trading, but you can see the transaction taking place as they do. I hope that's given you a good idea of how the pruning function works and how it reduces open trades tremendously, keeps the trades to a very low number. It did have a lot of open trades up to that point, but look how quickly it got rid of 2 trades, then it got rid of 2 trades, then it got rid of another 2 trades. So the pruning really does its job, reducing the number of open trades. Now I hope this video gave you a good feel of how, firstly, the profit retrieval process works, then the 2 trade pruning process works, and it gives you a good feel of how risk is reduced by not having excessive open trades. Also, it is very important that, as you've seen, the proper gap sizing is used. I've shown you how the 40 pip gap sizing was determined. That makes a big difference too. So a combination of all these settings and the pruning all add up to much safer trading. Links to anything mentioned in this video will be in the description of the video, as well as in the first commentary of the video. As mentioned before, these changes will only be effective in about a week's time. We still need to do a lot of testing and making sure that the changes are robust. The changes will initially occur on 3 of our EAs, the Wave Liberator, the RSI Liberator, and then the Hedged EA. So from me, Alex Deploy, cheerio.